Hey guys. So we are getting started on chapter 3. And so we're just going to continue using our assets, liabilities, and owner's equity. And we are now going to learn how to put them in what's called the general journal. So this is where we're going to live for the rest of the year, at least in the rest of the semester. So every single transaction that we do, or every single um, business, every single business activity will cause a transaction, and then that transaction and we've been doing them since the beginning, those transactions are now going to be recorded in what we call that general journal. So in the first part, we're just going to talk about the journal, look at it, see what is different. We're going to talk about some different source documents that are creating these transactions. And then we're going to look at how to actually create the journal entry. So the journal is where we're going to record all of those transactions in chronological order. And chronological order means by date. So we're going to start with January 1st, 2nd, 3rd, 4th, 5th, and we're going to go in order. So if you have a January 3rd, you're not going to have a January 3rd and then a 10th and then a 5th and then a 12th and then a 7th. It's not going to happen that way. So everything is going to be in order. So when we journal, when we put information into the journal, so when we record those transactions into the journal, that's called journalizing. So this is what that general journal looks like. It has a spot for the date. Is that a pointer? Laser pointer. Has a spot for the date, has a spot for what kind of account we're going to be using, cash, supplies, that kind of stuff. It has a spot for our document number, and we're going to talk about that here in a few minutes. Post-reference, we won't have to worry about this till chapter 4, but we're going to be putting some information here. And then here's our debit and here's our credit area. So notice the T. The T hasn't changed. It's still a tool, and it's going to be helping us in that general journal. Okay. So we use the general journal, one, because it helps us keep things separated. So it helps us look at each transaction and make sure that the information that we have is recorded in the correct account. It gives us a place to keep those things in order. And then, of course, it's an easy tool for us to see that double entry accounting because we have to have a debit and a credit for everything. So the source documents that we're going to be using, these are the things that that generate those transactions. So this is one example of a source document. So it's a check. So cash and check in accounting are the same term. They mean the same thing. So anytime we write a check, that check means that we're using cash out of our account to buy something or to pay something, okay? So this is an example. Over here on this side is our check stub. You guys are going to learn how to fill those out in chapter 5. And then over here, you'll learn how to write the check. That's the actual check. So a check is one form of a source document for us. The next type is an invoice. So that invoice, our example is always Web Delgado. So it has who we sold it to or who we bought it from. It has a number on it, has the date, it has the terms in which we have to pay back, right? Because if somebody buys from us on account or we buy from somebody else on account, we always have to have terms because some of these terms, if we pay early before that 30 days, they give us a discount. So we always have to have that information. And then down below, it tells us what we bought or what happened. and then how much it is. So an invoice is going to generate either a purchase invoice or a sales invoice. That it's going to tell us something happened that we have to do. We have to deal with it. So it says a sales invoice is also referred to as a sales ticket or sales slip. We're going to call it a sales invoice for our purposes. Another source document is a receipt. So this is something is paid with cash or has been paid and we have to write a receipt for it. So this example is Michael Delgado, who is the owner, and he's investing money into the business. So remember, the owner and the business are separate. So when he's putting his own personal money into the business, we call that an investment because he's investing, that money now belongs to the business. So this is what similar to a receipt. Notice it has a receipt number, it has the date, who received it from, what it was for, and then the actual amount of the receipt. Let me go to the next one. All right, and the next one is a memorandum. So if we didn't buy with cash and we ended up, so like this example is we bought supplies on account from Canyon Office Supplies. Anything that happened, so if the owner went and picked up something, anything that happened inside the business is going to go on to a memorandum. And that should be a familiar business term. And it's basically just communication within the business. So the owner, Michael Delgado, went to Canyon Office Supplies, bought supplies, charged them on our account, and brought back the receipt and wrote this up for the bookkeeper to say, hey, I bought some supplies on account from Canyon Office Supply. And then that memorandum creates a transaction for us that we have to do. The last one is what we call a calculator tape. So this will come out of like a cash register, or this will be the calculation for the week of collection of money if we don't necessarily have a cash register. So that's why it kind of looks like one of our 10 key tapes that we have on that back wall, those big calculators. So we call that a calculator tape, and the source document number that we're going to use is that T. Okay, that T symbolizes that it's a tape, and we're dealing with cash received during during our normal weekly operations. So like I said, so we have a check, we have an invoice, we have a receipt, we have the memorandum, and we have the calculator tape. So those are 5 different types of source documents that we're going to use. So now we're going to talk about how it looks like with a transaction. So we've been using the T accounts, and we're going to use those T accounts, and we're going to put them in the general journal. So we have on January 2nd, notice it says we received cash from the owner as an investment, $2,000, receipt number 1. So here's my January 2nd, goes in the date. We always try and put our debit first. So whichever side, remember cash is an asset, so it goes up on the debit. So we'll put our cash first. R1 is this source document number. So receipt number 1. And so we use the R for the receipt and the number 1. And it was $2,000. And then notice the slight indent here for my credit, Michael Delgado Capital, and it'll be a credit of $2,000. So that's how every single transaction is going to be set up. It's always going to have the date, the account debit and the amount, the account credit and the amount, and the source document. So those are going to be the steps that we're going to follow for every single transaction. Okay, those are the 4 steps. So the next example is paid cash on account. We have on January 2nd, we paid cash for supplies, $165, check number one. So our supplies are going up because those are an asset, and our cash is going down, and that's an asset. So we have our date. Since it's the second transaction, we don't have to write January again. We can just write 2. We have supplies. In your mind tap, though, I believe it makes you write down the date, the month every time. So we'll get to that when we do the work together. So there's the second, supplies, check number 1. Here's my 165. And I want you to take a look at these lines because they mean something. So this line, this box here where the double zero is, that's for change. That's for cents. This where the 5 is, it's ones, tens, 100s, and then thousands. This box here is for the thousands number. That's why it's written like this, okay? So change, ones, tens, hundreds, and then thousands. So that's why they're set up this way. And that's how we're going to record our stuff. And then, of course, we have our cash credit and then our check number 1. So we have our source document in here. We used to have to actually write it. There was no document number section. There was just a post reference box. And we used to actually have to write the description underneath. That was a long time ago. So the second part is using those source documents again and just continuing and practicing those transactions. So paid cash for insurance. Well, insurance is an asset. Our asset is going up. Cash is an asset. Our asset is going down. So this is what that transaction looks like. January 3rd, paid cash for insurance, 900, check number 2. Okay. There's my T accounts. Prepaid insurance, cash is going down. We have our prepaid insurance going listed first because it's going up. Check number 2 is our source document. So we have our $900. Cash is slightly indented and it's our credit for $900. The next account, bought supplies on account, January 5th. So remember, those 2 words are key, on account. That means we've bought them, but we haven't paid for them yet. So that's why they give us Canyon Office supplies. So our supplies are going up, and then so is our liability because I owe the money because I haven't paid for it yet. So notice the transaction is through a memorandum, and it's number 1. So we have our 5th, supplies, memorandum number 1, how much we have for our debit, and then we have our credit. And those same 4 steps happen every single time. Same 4 steps. January 9th, paid cash on account. So we're paying some of that debt. We're paying $100. So notice the accounts payable is a debit because it's going down, and the cash is a credit. The next one, January 10th, received cash from sales. Sales has their own account. We have our calculator tape, number 10. We have our date. We have our cash is going up $1,100. Sales is also going up $1,100. And the calculator tape is number 10. And notice it just says T10. Okay, T. You don't have to use the C. The next one, sold services on account. So our customer, Main Street, we provided a service for them. They haven't paid for it yet. That's why you see this arrow going up because they owe us. We're going to receive it eventually, $500. And since we sold services, remember, service is the same as sales. So we have our sales invoice number 1. So it looks like this. We have the date. We have our Main Street services. S1 is my source document. That's a debit. And then Sales is my credit. And remember, sales is always a credit. We paid the next one, paid cash for expense. So communications expense, it could also be telephone expense, it could be utilities expense, however they want to say it. But all expenses are debits, so those will always go first. So kind of like sales is always a credit, expenses are always debits. So we have our January 12th, paid cash for communications bill, including cell phone and internet, $80, check number 4. So here is my general journal. And notice we have a page number. I haven't even talked about that yet, but every journal has a page number. 12th, communications expense, C4 for my document, my $80, and then my $80 for cash because we wrote a check. So same 4 steps. This is another example of paying cash for an expense on the 15th, an equipment rental expense. Okay. And then this is received cash on account from Main Street. So they're paying part of it. So we just did a transaction where they charged 500, they're giving us 200 of it. So the amount that they owe goes down and the amount that our cash goes up. So notice cash is going to go first. And then we have our debits, and then we have our credits and our source document. The next one is owner's paid cash to owner for withdrawal of equity, $350. So the owner is withdrawing equity. So they're taking out cash. That's why it's a check. That's how we know it's cash. So we do our transaction. So drawing has its own account, and then debit, and then cash is our credit. And then we have our source document, check number 6. If we have to move to a second page, it is super easy. So here's page number 1, and this is what it should look like. So you should have 2 lines for every transaction, and you should have a debit and a credit for every transaction. So this is what it should look like. We never want to split a transaction. So notice this has 1 line left or a partial line. We don't ever want to write anything there because we're not going to have room for the whole thing. So if we do finish, so this is our finished page, and this is page number 1. Literally to start a new page, we just put the page number. That starts a whole new page. So the next page starts a whole new page. So page number 2. That's pretty easy enough. Now, if we make mistakes while we're journalizing, and this is what we're going to talk about before posting. So next chapter we talk about posting. So if I find a mistake before I update the individual accounts, I literally can just draw a single line through. We never erase an accounting. Erase looks suspicious. So we never erase an accounting. We want to make sure that we're only drawing a single line, because if you scribble, then that also looks suspicious too, because we don't know, you can't see what that information was underneath. So we do the single line through, and they actually didn't even have to do the whole thing. They could have just crossed out advertising and changed it to miscellaneous, because notice the transaction underneath it is the same transaction, but just put into miscellaneous expense instead of advertising. On the 28th, they had a transaction where they wrote it wrong. It was supposed to be $30. That's why you see the 30 in small print above instead of 300. It was just written wrong. The next transaction, you see it written, one is 4,300 and one is 430. That's a huge difference. It's like $3,800 difference. So you double check and see what that T was, what the actual amount is, and then you go fix it. Notice it's just written right above the number. So don't take up your whole box in case you have to fix it. And then the last transaction, we have multiple debits to one credit. And we can have transactions like that as long as they equal each other. So remember, our debit has to equal our credit, right? Or our plus has to equal our plus, or our minus has to equal our minus. So in this case, it was a transaction where we bought multiple things with the same check. So we spent $35 on miscellaneous stuff. We bought some postage for $23, and we wrote the check number 12 for $58. So it's okay if we list out multiple things as long as our debits equal our credits. So notice if we make a mistake, we just single line through it and fix it above. Okay. And I believe that's it. So we're going to be doing that. We're going to be doing all of this stuff in our mind tap for our work together. All right. Have a great weekend, guys, and I will see you next week.